Hi, this is Alan Gassman, and I'm going to cover our valuation discount calculator for an active business. This is a very simple calculator, and it is intended to help us show clients what a business entity might be worth, and to also basically run the numbers once we are told by a valuation expert how those numbers all fit in. So I click on the calculator, and I'm able to provide a name for the entity, and then the annual earnings before income taxes, depreciation, and amortization, known as EBITDA. So for many businesses, you would use a multiple of earnings. So if this company earns $300,000 a year, above and beyond reasonable compensation paid to related parties and reasonable compensation paid for rent and things like that, you would multiply that by a multiple provided by a valuation expert. That multiple may be 7 times earnings, 5 times earnings, 12 times earnings. It all depends on the circumstances of the business. But let's assume that it's 7.2% times earnings. In addition, when you look at a business entity, the valuation expert will normally tell you if it has more assets than it needs to run the business or fewer assets than it needs to run the business. So in this situation, we've determined that this company has $500,000 more in assets than it would normally need in order to justify a 7.2 times multiple of earnings. So it's going to be worth $500,000 more than a typical company in this situation. We, of course, also will want to subtract out any debt. So if the company has $200,000 of debt, then the valuation expert would reduce the value of the entity by $200,000. Now, typically, you're not going to be transferring the entire value of the company. You might be transferring perhaps 35%. So I can click the 35% of the company being transferred, and then I can tell whether the company is voting or non-voting. And following that, there are typically three discounts that apply when you transfer less than 50% of a company or even 50% of the company. There's a lack of control discount, which might be 18%. There's a lack of marketability discount, which might be 23%. And then there can be a tax affecting discount to take into account that an investor will pay less when there may be capital gains assets or ordinary income treatment of what's received. In other words, the investor may say, I'll pay 7.2% I'll pay 7.25 times EBITDA, but I'll take an 11% discount because I have to pay income tax on that in valuing this opportunity. So now I can click to see results, and across the top, what this now tells me is the name of the entity, the EBITDA, the multiple, that the going concern value is $2,160,000. Add to that the excess assets, subtract the debt. The company itself is worth $2,460,000. 35% of that would be worth $861,000, but taking into account the lack of control discount, the lack of marketability discount, and the tax affecting discount, will pull 43.81% from that $861,000. So the total discount we're going to get is $377,000, and the value transferred is $483,836. Now, I can't emphasize enough that you want to hire a valuation expert in order to tell you what all these numbers are and whether they may be different. Sometimes it will be based upon a percentage of revenue. Sometimes it'll be based upon a percentage of net profit as measured for tax purposes. But this is just one way that you can show a client how to value a going concern company and part interest therein. Now, once I have this where I want it, I could say, well, if I go to another valuation expert and I duplicate this, but the other valuation expert tells me that my multiple of EBITDA is 7.6%, but my lack of marketability is only 20%, and my tax affecting is only 6%. Now, with those different variables, the value of what I'm transferring is worth more. And it's just worth considering what might be available and how this could impact the situation. Now, once this is completed, I can click Share with Client, create URL, copy to clipboard, and now the client can receive an email. I can paste this into the email, send it to the client, send it to the financial advisor, send it to the CPA. They can go directly to this calculator, put in 266644 as their password, and have 14 days to use this valuation calculator and change things around to see what might work here. There's also the ability to create a PowerPoint by simply clicking on General Explanation and clicking on PowerPoint. So that is the business valuation discount calculator. I hope that you use this and that it is helpful, at least in explaining to clients and perhaps young professionals what goes into the valuation of a business and why you need a valuation expert to help you determine what all of these percentages might be. Thank you very much, and thank you for using or considering EstateView estate planning software.